All right, what's up everybody? This is Fairslime, the editor of the Bowser Report, which is a long-term penny stock investment newsletter. Today we're going to be talking about an educational topic, right? We're going to talk about how we pick stocks and what things we look for when we're scanning for stocks. So basically, I'm going to use two free resources to show you guys how to scan for these stocks and pick which ones you want to invest in long-term. Okay, this does apply to short-term investments as well, but one thing that I want to emphasize before we get into it, we focus on fundamentals for the Bowser Report, right? We're talking about the long run, so companies that have a really strong financial foundation, right? Good revenues, good net income, et cetera, et cetera. So not only am I going to show you some basic things to scan for, but I'm going to show you some of the more favorable things that we look for when we're picking stocks in general. Okay, so the two resources that we're going to be using today, you don't need to pay for them. Okay, let me be clear. I know that the Bowser Report is a paid newsletter, right? We offer a $9 monthly subscription, but we're going to be using Finviz, FINVIZ.com, right? Which is right in the URL right there. Okay, and we're also going to be using Yahoo Finance, which is finance.yahoo.com. Okay. And again, that's Finviz, FINVIZ.com. And then Yahoo Finance, right, which is finance.yahoo.com. Okay, if you can read that, great handwriting. But either way, we're going to get into it because I want to make sure that we cover all the bases here. It's going to be nice, short, and sweet. So let's get into it. All right. First things first, when you pull up the Finviz website, again, you don't need to log in or register or anything. This is a pretty good tool to not have an account with. It lets you come and go pretty easily, unlike Yahoo Finance, which is a little bit more complex. You can see that there are a bunch of different things to select here. Right? What we're going to use is the screener. And just to be clear, because I do day trade actively as well, we focus on long-term investments, but a screener is something that doesn't refresh automatically. That's the difference between a screener and a scanner. So technically, we are going to run through some basic screener settings to help you find tickers. But the general term that people use all the time is scanning. Okay, so this does not automatically update, right? You can turn on the auto refresh every few minutes. Doesn't really matter, right? But basically, we're going to run through two different descriptive filters and then a few fundamental filters, because what we want to do is we want to narrow it down to a broad base and then filter that down and down and down and get more specific. And this is something that I'll refer to a couple of times, but when you're scanning, again, you have this big pool of thousands and thousands of stocks, and you want to narrow that down to a much smaller list so you can filter through, look at the companies, XYZ, right? And actually get to know what those fundamentals are all about. But the trick to scanning is you want to make this a very average size list of tickers and then filter it more and more and more. So it's not just in terms of how many filters you have, but also what the cutoffs are for them. So for example, right, let's say we are filtering just based off of fundamentals, and we'll go to the descriptive part in just a second. But if I want to filter this out based off of the PE ratio, right? The price to earnings ratio. And we don't need to get into the details of what that is or, you know, what a good PE ratio is. But if I put it as low, I'm going to get a lot of results. If I put it as profitable, which is the medium level, I'm going to lower that to a much smaller size. And then high is going to be very few tickers. So I want to find the middle ground. And then if I need to sort it down more, I can raise it some more. Okay, that's the idea here. So you'll see that with a couple of these parameters, but let's go back to descriptive. So basic things that we like to preach to Bowser Report subscribers, and one of the most basic things of our game plan is we don't want to pay more than $3 for a stock. And some of you guys might immediately start frowning to that, and you might say, well, I'm perfectly comfortable buying higher price stocks. That's not the point. We're looking for stocks that haven't really ran up a lot. And $3 historically has been a great price for us. So we're going to go over to price under $3. Okay. It's a pretty limiting filter right there. Now, our results, as you guys can see, are updating down here, right? As we add more filters. So you can already see that right off the bat. We're going to add one more descriptive filter, and that's just under market cap. Because as you probably know, there are a lot of stocks that trade at $3 that have a massive market cap, right? Fannie Mae, Freddie Mac, et cetera, et cetera. There are stocks that trade at $100 that have a pretty small market cap. So price isn't really always indicative of how big the company is. Okay, so we're going to go over to market cap, change that back down to small. Well, actually, sorry, we're not going to hit small. We're going to go with less than small. Okay, because this really limits us. So we're going to go less than small, under a $2 billion market cap. All right, those are the two descriptive filters. So now we're going to move over to fundamental, because again, technical is more for short-term investments. We're going to look at fundamental. All right, we want strong financials. Now, remember that we want to keep this general and vague and then narrow it down more based off the number of tickers that we're given, because I don't want to sort through 31 pages of tickers. That defeats the purpose, right? So first things first, we're going to tackle three different parts of this, right? We want the company to have decent revenue, okay? We want it to have decent profits, all right? And then on top of that, we want a healthy balance sheet. And really, a good way to generalize a balance sheet, because that's really the question. How do we generalize strong income? How do we generalize a good balance sheet? For me, that's just liquidity, right? Whether they have a lot of assets, current assets, or whether they have minimal current liabilities. Because if there's a high liquidity risk, you can really take a big loss on that position, and the company actually could declare bankruptcy. So bare minimum, just scraping the surface here, we want to have a decent current ratio. Okay, those are the three things that we're going to add. And this one I'll elaborate on a little bit more. Current ratio is just the current assets divided by the current liabilities, right? So again, there's that liquidity. If that number is low, that's bad. If it's high, that's good. Since it's a ratio, ideally you want it above 1. For the Bowser report, we usually like it above 1.8. That's our cutoff. Okay? That's in order to get it a point on our rating system, right? So if that's the case, we're actually just going to do 1 or 1.5 here for current ratio, which is right there. Okay? Because it doesn't have a 1.8 feature, and we're not going to, jump through hoops to make that happen. So, going to go to current ratio. Let's just go over 1 for now. Okay, over 1, because remember, we'll trim it down afterwards. So, current ratio over 1. All right. Profits, really, this is the tricky part in terms of profitability, because you could go to the price to earnings ratio. You could, go to any one of the margins. Basically, it has 3 different margins here: gross, operating, and net. The more you move over, the more strict it is and the less results you'll get. Okay? So since we want it to be a little bit more lenient, a little bit more lax now, we're going to go with the gross margin filter here that is positive, because we just want a company with decent profit margins. Is that really that much to ask? I don't think so, right? And then the last part of it is just sales growth. Basically, one thing that we look at is long-term consistency, because we're looking at long-term investments. We don't just want this company to have one blowout quarter and then, earnings and revenue go back to crap afterwards. So by that line of logic, we want to have a long-term sales trend. Long-term earnings trend is important as well, right? EPS growth, but that's a little bit more rare. You're not going to get a lot of results if you stick to that. So we're going to go sales growth past 5 years, okay? And ideally, we go over 10% here. Okay, we'll be a little bit more strict with this one, over 10%. And already you can see the results pouring in. We've cut it down from hundreds of pages to 3 pages. Okay, and right off the bat, you can see some of the Bowser Report stocks that we've recommended in the past, right? AEHR, let's take a look. I bet we'll find more. DSWL, which is a slower one, right? FPay, those of you who have subscribed within the past year, FPay doubled from our recommendation in just a couple of months. Outstanding mover. FSI, that's an old one. So already out of the first 20, 4 of them are past or current recommendations, right? Good companies and easy to filter through. Now, one thing I'll say that helps me filter through these, if this is too much for you, you can just raise any one of these numbers. So the current ratio from 1 to 1.5, right? You can raise the gross margin to a higher number, okay? Or you could raise the sales growth to an even higher number and see how that cuts off a page just by going one little box higher, okay? But the goal here is not to add too many filters. You can be really strict with just a few, but try to limit to 3 to 5 fundamental features. Okay, 3 to 5, that's the sweet spot. And then you can increase those and be a little bit more strict. Because if I add too many, I'm just gonna get companies with a really weird income statement and a weird balance sheet that really doesn't tell me a whole lot, okay? So that's an easy way to filter through. The last thing I'll say, so this is a basic screener that you guys can use whenever. Last thing I'll say, for FinViz, there are different ways of categorizing it. So basically this is the view that you have for the results, and I can order them by price, I can order them by volume, etc., etc. But we're looking at fundamentals, right? So one of the cool things that they have is they have this bar here where you can see a snapshot of the stock that gives you all the ratios, the chart, etc., etc. And one of the things that I like to do is I like to go to the financial one. Okay, that guy there, financial, because it shows me all of the metrics, right? So if I want to order it by, gross margin, then I can do that. All right, and I can see which companies have the highest profit margins. And when you hover over the ticker, a little chart will pop up too, right, of the recent price action. Okay, so really cool tool in my opinion. FinViz, very useful, but again, we just added 3 fundamental filters and 2 descriptive ones. Okay, now not everybody likes to use the same resources, not everybody likes to use the same tools, and some of you might already have an account with Yahoo Finance. So we're gonna go over another bare bones scanner in Yahoo Finance because they recently added the screener tab as well, right, within the past year or so. Again, for Yahoo Finance, it's just finance.yahoo.com, okay? Nice and simple. It has a bunch of different features. To be honest, I really don't like a lot of the recent changes they've made, but that's neither here nor there. We're just focused on one aspect of it, and that's screeners, okay? Also Taylor Swift's new album, of course. Screeners, so we're gonna click this right here, okay? finance.yahoo.com/screener. And you can see that they have a bunch of preset ones. I really haven't had much luck with these, to be honest. I think they're good for active portfolio managers, right, if you're trading, but I don't think it's very useful for long-term investment, okay? So basically, we're just gonna hit create new screener, simple as that. Just like what we did last time, small cap, all right? Price is less than $3. Nice and simple. Okay, we're not going to add a sector or an industry, so you can just click the little X there to remove something if you want. This is also scanning within US stocks. Okay, and I'm going to click add filter, right? It doesn't have all the drop down menus like FinViz, so you have to add the filter. And we're going to add some similar ones here to what we had last time. Again, this is why I said Yahoo Finance wasn't as intuitive. This is overwhelming to me. I have no idea what's going on if I'm a new investor and I pull this up. So basically the 3 things that we looked at last time were earnings, right? Basically a margin, okay? Current ratio, and then revenue, right? Sales. So I'm gonna do the same thing here, just in another resource, and you can actually make them slightly different if you want, right? You can have different preset scanners. So in this case, I'm going to go to income. I'm actually going to switch it up and go with the EBITDA here. Earnings before interest, we're not going to get into that. Basically earnings, right? Shows a healthy margin if they have a positive EBITDA. So click that one, right? And you can click close right away and just add it, right? EBITDA greater than 1, just to make sure it's positive. But you can also add all the filters at once. So I clicked add filter again, and I'll show you guys, we're going to add current ratio. which might be undervaluation. Yeah. Current ratio and revenue growth. We don't want quarterly because, again, they could just have a blowout quarter and that doesn't tell us a lot. 1 year change. How's that? All right. So it's not really focused on the long-term trend as much, but still 1 year is the definition of a long-term hold, right? At least 1 year. Okay. So EBITDA greater than 1. We just want to make sure that they're not, reporting poor bottom line results. Current ratio greater than 1.5. Let's be a little more strict. And then 1 year change in revenue. Let's go 15%. Let's get a nice little middle ground there because that's in percentage. Okay. Find stocks. And the one big advantage to Yahoo Finance over FinViz is Yahoo Finance scans on all of the different exchanges, right? You might be saying, well, FinViz does that too, but it doesn't scan all of the OTC stocks, just some of them. I don't know why. They've removed them over the years. It was doing it 4 years ago. It's not anymore. But Yahoo Finance does allow you to scan through OTC. One thing I do right off the bat, because this returns a lot of random tickers since it has all the exchanges, I like to sort it by market cap. So I'm looking at more established companies, and then I go through it like that. Okay. So you can see already right off the bat, there are a lot of tickers with an F at the end of it. Usually these are a little bit quirkier of plays, right? Most of them foreign stocks, some of them just basic resource companies. Okay. But we can just keep scrolling through and scrolling through and scrolling through and picking our favorites. Okay. I still like FinViz more. That's personal preference. You do whatever works for you. Okay. But the big highlight to this is we do have a stock investing competition coming up. And to be honest, this is a great way to pick some that are still going to perform well short-term and long-term. Okay. Finviz.com, finance.yahoo.com, both free resources with paid alternatives. You don't have to pay. Okay. And if you do want more in-depth analysis and more educational resources like this, feel free to subscribe to our monthly newsletter as well. Okay, at thebowserreport.com. Either way, I hope you guys enjoyed the video. Hopefully you can pick some good stocks for long-term investments. And congratulations on the recent bounce back in the markets. It's been pretty opportunistic, to say the least. Okay, so green screens to you guys. Enjoy your day. Take care, folks.